So it's a random Tuesday afternoon. Everything's going great in your business and you're checking your email and you have that email from a client that says, hey, I'm purchasing a home and my mortgage lender needs you to sign off on this letter. It's attached. Would you please send this back to me as soon as possible? Our closing depends on it. And you just drop, you sink, you go, another comfort letter, right? I know that you might be thinking that. That's what I used to think was, okay, how am I going to respond to this? I know that I'm not supposed to do this, but how do I make sure that I'm not the reason my client's mortgage falls through? Now, maybe you don't struggle with that. I hope that you don't. If you do, I'm going to share with you kind of a great response and what the AICPA says to do about these requests for comfort letters, these requests for your CPA to verify that you're self-employed or your CPA to verify your income. I hope that you're not responding to these. I'm going to show you why you shouldn't be as a CPA. Now, if you're not a CPA, if you're an enrolled agent or if you don't have a specific credential, you're just a tax preparer, then I don't really know. I still am pretty sure you should not be giving them what they're asking for. Now, you don't run the risk of losing your CPA or potentially your EA if you don't have one of those things. But I don't think you can sign that letter. If you're not a CPA, if you're an EA or you don't have a credential, I'm pretty sure you should still be able to use this letter. The letter just simply states that you prepared the return and that you didn't verify the information, that you're not expressing an opinion on it. If you're not a CPA, you're not allowed to express an opinion, or at least not one in the traditional sense that most people are looking for an opinion on financial statements. So this letter, I think, would be a great response for you as well. You also don't have to come up with a new email every single time. You can respond in the same exact way, and you can provide them something that the vast majority of mortgage lenders will accept. And it's a letter template from the AICPA. I'm going to show that to you. I'm also going to put links to it in the description below. So this is guidance from the AICPA. I didn't check, actually. This is one that I saved. It is from August 2014. Now, I saved it sometime around 2020 or 2021. I don't think that there's new guidance on this or anything. This resource may have been updated, but it's still applicable. It still works. This is what to know about third-party verification letters, also sometimes known as comfort letters. This is from the AICPA. This is what you need to know. The great thing about this is it gives you some general information here at the first page and the top half of the second page. And then there's a bunch of types of requests that you have probably seen before. So request from a government agency, okay, we don't get that. Okay, request from a lender to verify, certify, or otherwise validate information presented on a tax return to a third party, such as a mortgage lender asking the CPA to certify self-employment income on a tax return. So I know that you have probably gotten this email before. If you've been doing this for any length of time, your client has reached out to you and said that their mortgage lender, for them to get the loan, has to have you sign this letter or to provide something to them. I just got one recently, exactly like this. The phrase to avoid, I verify that the tax information presented is correct. Now, this is pretty normal for you to probably think, I prepared an accurate tax return, I did my job well, I will respond back and say, yes, the information in the tax return is correct. Well, the answer with factual information only, the answer that the answer that AICPA says that you should give is that at the request of my client, I have attached a copy of the tax return and related schedules provided to the IRS for filing for tax year, whatever. The attached tax return reports income from self-employment of whatever. I actually don't put that sentence in my letter. I don't think that's in the template letter that I got from the AICPA because I didn't really change it. I just use it the way that I downloaded it. So I do not have this sentence in here, but it looks like that would be an okay sentence to say as long as you include the other information. The return was prepared based on information provided by my client. This information was neither audited nor verified by me. I make no representation, nor do I provide any assurance regarding the accuracy of this information or the sufficiency of this tax return for your credit decision-making purposes. Now, why is that? Well, if you're preparing a tax return, you have not done a test services. You have not done a review of the financial statements. You have not done an audit of the financial statements. Due diligence standards under the Statement on Standards for Tax Services and IRS Circ 230 generally allow CPAs to rely on information provided by the client when preparing tax returns. These standards are not sufficient if the CPA is being asked by a lender or broker to validate information furnished by a taxpayer. As a result, in order for the CPA to substantiate to a third party the financial information furnished by a taxpayer in a tax return, the CPA is required to perform additional procedures to verify the information is accurate. Under existing AICPA standards, a practitioner may provide a client with various professional services that may be useful to the client in connection with financing, such as compilations, reviews, or audits. If you have not done a compilation, review, or an audit, you cannot give an opinion on financial statements, even if you prepared the tax return. Giving an opinion on the tax return, the information in the tax return, is the same as giving an opinion on financial statements. You can state that you prepared the return based on information that the client provided. Even if you went through that information, if you didn't perform the services of a compilation, a review, or an audit, which of course have very specific parameters over that, then you can't state an opinion on those. That would be an ethical violation of the AICPA Code of Conduct, and I think you could lose your CPA license for that. Now, this matrix goes through several other requests that you might get, responses to avoid, and responses that you should give. So like I said, I'll put a link to this particular PDF document. It's just in my Google Drive. I'll put a link there where you can get it and you can download it. You could also, if you're a member of the AICPA, you could find this in their resources. And maybe even if you're not a member of the AICPA, you still might be able to find it on the AICPA website. So what does the letter look like? This is the letter that I give to clients when they ask for anything regarding a lender. I provide tax returns to my client, and the client can do whatever they want to with those. So they will give the tax returns themselves to the lender, and then if the lender asks for me to verify anything, this is the letter that I give. I'm writing at the request of the client. The purpose is to confirm that I prepared the income tax return and delivered it to the IRS. The client provided the firm with a signed copy of Form 8879 that includes a declaration that they looked at the return and basically agree with what was in it, that the information was true, correct, and complete to the best of their knowledge. The return was prepared from information furnished to me by the client. It was not audited. It was not verified by me, and I make no representation nor provide any assurance regarding the accuracy and completeness of this information. Now, this doesn't say that you didn't do your proper due diligence when it comes to preparing a tax return. You follow up on questions if you have questions. You make sure maybe the bank statement was reconciled before you use the financials to prepare a tax return. You still have to use, professional due diligence and to prepare an accurate tax return. This is not saying that you didn't do any of that. But to state an opinion on financial statements is very specific. It's highly regulated, and there are standards on preparing compilations, reviews, and audits. You did not do that. Now, if you did that, fine, right? You provide that to the client, to the lender. If their business is large enough, they're going to need a review or audited financial statements probably. And you, if you provide those services, would want to engage and charge for that. That is something completely separate. But in terms of what you did some follow-up. You made sure the tax return was prepared, following your due diligence for tax prep. But that's completely different than attest services to provide compilations, reviews, and audits. You did not do that. So the sufficiency of this tax return, I make no representation on that as it relates to your decision to extend credit or make any other determination regarding the client or other persons or entities. I prepared the client's tax returns in accordance with applicable tax law, regulations, and guidance for filing tax authorities. As a result, the tax return does not represent any assessment on my part as to the creditworthiness and does not include any statement of their financial position or income expenses for the year 2020 in accordance with generally accepted accounting principles. GAAP's also different than tax basis, right? And it should not be construed to do so. And then this is one of my favorite paragraphs. This paragraph to me basically says, I'm not the lender. Don't try to push your job off onto me. Do your own job. That's your responsibility to evaluate the creditworthiness of a client and you cannot pass that responsibility on to me. Now, again, if the business is big enough and the loan is big enough, banks are going to require reviewed or audited financial statements. I don't have any clients that are that large. The lenders that they're going to only need a couple of copies of their tax returns, and they will be able to make their determination from that. But it's possible you have clients that will need reviewed or audited financial statements, and maybe you're already doing that, or if you need to refer them to someone else, then you'll have to do that if you don't provide those services. But with that being said, this says, as you know, a credit decision or any other determination for which this information might be used should be based upon the exercise of due diligence in obtaining and considering multiple factors and information. Any use by you of the client's federal income tax return in this letter is solely a matter of your responsibility and judgment. This letter is not intended to establish a credit relationship with you, nor is it intended to establish any obligation on my part to provide any further information to you regarding the client. Then it goes on to say, I prepared the tax return solely for filing with the Internal Revenue Service and state and local authorities if applicable. My work is not intended to benefit or influence any third party, either to obtain credit or any other purpose. As a result, you agreed to indemnify and hold me harmless from any and all claims that, with respect to the use of the tax returns for any purposes other than filing with the IRS, state, and local tax authorities, regardless of the nature of the claim, including the negligence of any party. So again, your preparation of a tax return is to comply with tax laws. It is not for people to look at the financial statements and to determine an opinion on the value of the business or to determine an opinion on the creditworthiness of the business. That requires you to do different things depending on compiling financial statements, if that's what's needed, reviewing financial statements, if that's what's needed, or doing a full audit of the financial statements, if that's what's needed, in order to express an opinion signed as a CPA. I mean, this is the whole, your CPA, yeah, it gives you rights to represent clients before the IRS, but the CPA is respected and what it is because of the opinion, the value of the opinion of someone trained and qualified as a CPA on financial statements. I mean, the CPA really is for reviewing, auditing financial statements. That's kind of the crux of it. Even though the vast majority of the public thinks of CPA when it comes to taxes, that's really what it is. And so, you can't express that opinion unless you do the due diligence to review, audit, or compile financial statements. So if you're doing this, please stop. You're putting yourself at risk, and take the examples here. Use these letters. Provide this. Now, recently, the one last week that I got, that client emailed me back and said, hey, the lender isn't able to use this, but we'll figure something else out. I don't know what that means. If they're going to figure something else out, then it's fine, right? I mean, all they need for this particular client and for all of my clients is 2 years of tax returns. Every other lender out there is doing that. Okay, not every other one, because there's multiple out there that are asking for these things. But my experience is usually when I provide this letter, I never hear anything else from them. They get the loan, they put the letter in the file, and they move on. And if they need something else, they need to request it, and then I'm going to have to refer my client to someone who can do a review or an audit. And that's going to cost a lot more for the client. Usually lenders will move on without those things. So this is the extent of what I would tell you to provide. I also include with it in my email back to my client just as an explanation, like, hey, I can't provide what the lender is asking for. I know that they don't understand the guidelines and regulations that CPAs have to abide by, but in order to state an opinion on this, there are other engagements that I would need to do, and I'm not allowed to state an opinion without doing those based on the ethical guidelines and standards from the AICPA. And here's what I am allowed to give you. And usually, most of the time, it's fine, it works. The loan moves on and everybody's happy. Occasionally, you get a lender that is a problem. Maybe it would be good to have some other lenders that you could refer your client to who will do it based on the tax returns and not ask for these things that you can't provide without doing the additional services and charging additional costs to the client. So there's the question. There's the answer. There's my opinion on it. I hope that this helps you. You don't have to drop your head or be annoyed or be frustrated or wonder, man, am I hurting my clients? This is what you're allowed to do. This is what you should be doing. Follow the guidelines from the AICPA. Don't provide something that you're not supposed to. Don't accidentally even just reply back like, yes, I prepared the tax return. Yes, the information is accurate in the tax return. That seems so innocent, but it's not. It's stating an opinion on the accuracy of financial statements that you didn't do a review or an audit on. If you have other questions, feel free to leave those for me in the comments, and I appreciate you watching.